What's good, y'all? So this is how I made about $500 trading NASDAQ futures today. So let's get right into the charts. So today is the first trading day of March. And so the first thing I want to point out here, looking at the daily chart of the NASDAQ, is that last Friday, we traded into this daily BISI here. I'll go ahead and quickly outline that. We traded into this daily BISI and held it, right? So going into this week, I still was potentially watching for the market to go higher, right? We also did have an SMT with the S&P 500 here. So, but we had one other thing. We had a daily SIBI here as well. So because of this, I kind of, going into today, didn't have much of a strong bias, honestly. I was just going to watch the price action and see kind of what it gave us in real time, but I honestly didn't have a strong daily bias today. Sometimes when you get these conflicting things, like being in between, a daily BISI and a daily SIBI, right? Like you can be so stuck on a bias, and it cannot work out. So going into today, I tried to not really have much of a bias. I was going to look for an opportunity to take a short if it presented itself. I look for opportunity to take a long if it presented itself, or nothing would present itself, right? So dropping down to the hourly chart, this is kind of how the market looked going into the 9 a.m. hour. A few things I want to point out. As you can see, here's that daily SIBI outlined on the hourly. A few things to point out. We did have some buy side liquidity from Thursday's sell-off that was resting here. So I'll go ahead and outline that there. We also had some buy side liquidity that was swept, right? This was the overnight session highs. It got swept going into our New York opening. So we'll go ahead and outline that as well. That was an important thing to note. And then we had our London and Asia session lows here, right? We had our Asia session sell side liquidity here, right? So that's important to note. Every single day you want to note where are your session liquidity pools resting, right? So yeah, Asia and London kind of resting here. So we go ahead and annotate those. And then one last thing you should be, that's sell side. One last thing we should be annotating as well is any sort of imbalances that you note on the higher time frame. So on this hourly chart, you can see that we had this hourly buy side imbalance, sell side inefficiency, fair value gap, right? So that was important to note as well. So those are kind of some of the PD arrays I was looking at. We did have this hourly one as well up here, hourly SIBI from Thursday sell-off. But all of this was low resistance liquidity too, right? So what does that mean? That means this could all get cleared in one move, right? That's essentially what low resistance liquidity means. So all that could potentially be swept quickly in one significant drop down. And, that's honestly what I was expecting to see when the market did open, because we did have this imbalance here that needed to be rebalanced too, right? So if we look at the 15-minute really quick, noting any potential imbalances here as well, you can see that we had this 15-minute BISI here too. So that was something important to note. 15-minute BISI inside of a 1 hour BISI, right? So go ahead and mark that, or I'll just leave that. And then, so going into our New York open, this is kind of what happened. The market did open, right? We came and swept this liquidity pool up here, right? This buy side, we came and took that. There was an SMT here as well with the S&P 500, right? S&P 500 failed to take this high while the NASDAQ did. And we also sold off after sweeping this buy side liquidity from Thursday right through our low resistance liquidity, through our Asia lows and our London lows into this higher time frame discount array, which is a 1 hour BISI and the 15-minute BISI that I outlined as well. So I was waiting until 10 a.m. to take any, potential trade. Generally on days like this, when I don't really have a clear bias, I like to wait until 10 a.m. Most days, actually, I like to wait until 10 a.m. Until the morning range is put in and there's a clear, much more clear draw on liquidity. I think sometimes that opening 30 minutes can really cook you if you're not careful. So looking at the lower time frame going into 10 a.m., this is kind of what the market did. You can see that as soon as 10 a.m. opened, we had a significant kind of gap down here, right? This volume imbalance formed between 9:59 and 10 a.m. And that was something I was noting going into this 10 a.m. hour, right? And we did trade lower, rebalance this 15-minute gap completely, right? Swept the sell side liquidity from the overnight lows, London and Asia, and then we hit the midpoint of that 50%, or hit the consequent encroachment of the hourly BISI as well that I outlined. So at this point now, because we swept these session lows here, I was potentially watching for a change in state of delivery, right? So meaning now at this point, right, we took this internal liquidity, right? And that's one thing, again, I want to outline this. I talked about this in a previous video. What does a change in state of delivery actually look like? And what is, because for me, my setup entails a few things. I need to see a sweep of liquidity. I need to see a change in state of delivery, right? And I really need to see some displacement right through that change in state of delivery, ideally. So that's generally what I'm looking for in order for me to validate an entry. So your change in state of delivery has to be through the price run that swept the liquidity, right? So if this is my sell side liquidity here at this level that I have annotated at 20,836.5, a change in state of delivery at this point would be up here, all the way up here. Let me remove this. Don't need that. A change in state of delivery at this point would be all the way up here, right? So in order for me to validate me going long at this point, I would need to see the market come all the way up here. Obviously, that's too big of a range and a stop loss, right? So now I'm waiting. That means we need to put in another internal low in order for me to justify some sort of long opportunity. So once 10 a.m. kind of gets closer, we do put in this low here, right? And then at 9:59, we validate that low. And then at 10 o'clock, we come and we sweep this internal liquidity here, right? This is an internal liquidity sweep, right? We take that liquidity. And now at this point, now the price run that took this low is now these series of down close candles, right? So now in order for me to validate a long entry, I would need to see a change in state of delivery through this opening price, right? That now becomes my change in state, not up here, right? Because now we've swept a new low. So that being said, the market does, come higher here. We retest that opening price, but we don't quite close there. You can see we haven't put in a new low yet, right? And now, boom, we close here above it, right? We close right above it here. So at this point now, you could have taken an entry here. And what I did was I waited for this retest, which we got here, right? Now, here's what you need to note. Look at this range. This is a great entry opportunity, but you have to be considerate of what your stop loss would be at this point. At this point, your stop loss, to invalidate this trade, we would need to close below this low. So your stop loss would be here. That's a 100-point stop loss. So because of that, I entered this trade with lighter size than usual, taking only 3 contracts here, right, with my stop loss here, right, risking about 1%. I want to risk a consistent amount every single trade, right? You don't want to be, your risk should not be changing, and your risk is based off of where does your trade get invalidated. At this point, my trade is invalidated here. So now what I want to see is now, okay, well, how do we react to this series of down close candles, right? We have this volume imbalance. We have this order block here, right? So now I'm trying to see how do we react out of that, right? So the market does come lower, right? We continue to trade lower. We do try to get some delivery out of it, right? But we do ultimately fail because we trade into this 1-minute SIBI, right? And come back lower here. And now notice we have another low here, right? So at this point, I was watching for this low to potentially be a sweep of liquidity, right? And now validate some sort of new order block or change in state of delivery. So now at this point, you can see we sweep this low, we come down, stop loss has still not been triggered or hit yet, right? And so now we come back higher, right? Validate this as another change in state of delivery here, right? Why? Because we swept this low and displaced above it. So now this is a valid order block or change in state of delivery that you could potentially use to re-enter a trade. So at this point, what I did was I entered another 2 contracts here to be in full size at about this price. So now my average went to about 28.62. But the thing is now, because we swept this low now should be protected, right? So now I should be able to move my stop loss, right? And that's why I was comfortable doing that, because I know now my stop loss is, instead of being down here, is here, right? And so now at this point, this low should hold and it should not break. So stop loss now goes there. I didn't even talk about a target yet, but I can kind of show you what I was looking at. We had a 15-minute CIVI that was formed here, right? So this high at 28.98 and this opening price at 9.42. And then we also had the midpoint here, right, at 9.20. So that's kind of what I was watching to target. Not gonna lie, it wasn't the best risk to reward trade, but again, going today, I was just looking for a quick scalp. Wasn't looking to be in there too long holding a trade because I didn't really have a clear bias. So I was potentially expecting today to be an inside range day. So you can see now, getting back to it, this low should hold. So now the market does come back. We have a BISI here, right, that I was watching for us to potentially hold and reverse off of, right? So I wasn't panicking here. There's no really need to panic here. I mean, you're just kind of watching order flow, watching pricing. Is order flow holding bullish or bearish price delivery, right? You can see we do ultimately end up inverting that fair value gap here. And then we do have this opening price, right? Because at this point, if the market is truly going to reverse, we should see this open price hold, right? Because this would validate now that this was potentially looking to go lower if we close below this. So now I was watching this opening price, right? Because we had already come down, rebalanced this 15-minute gap. We also had this 1 minute discount consequent encroachment of this wick from 10 a.m., right? So I didn't want to see 790 really traded again either, right? Because we already held it. So now at this point, you can see the market does come. We hold this, right? Continue to hold it, just kind of chopping in between this inversion fair value gap and this opening price, right? And then something interesting here at 10:20 a.m. or going into 10:20 a.m., you see that we sweep this internal liquidity here, right? This is an internal liquidity sweep right here. So what does that mean? That means now we have a new sweep of the low and a new, if we get above this down close candle, that now becomes a new order block, right? A new valid order block or change of state of delivery. So now at this point, I'm watching for this potentially to be retested, and now that send us higher. And look at the time, 10:20. I'm going to keep saying it. A lot of people say that there's not a 10:20 to 10:40 macro. But when I see stuff like this, it leads me to believe there has to be some sort of algorithmic price delivery happening at 10:20, right? Because why does the market come, retest this change state of delivery perfectly, and begin to spool through this inversion level? And now we get a reclaimed fair value gap, which the market then comes and retests, right? And now we spool through these highs right at 10:20. To me, that's not a coincidence. That's not random. I believe there truly has to be a macro at 10:20, right? We get some algorithmic price delivery. And so at this point now, once we spool through this high, I feel comfortable enough to move my stop loss here, above here, right? And then also once we get through this high, then I'm pretty comfortable to move my stop loss up to break even now, because I don't really want to see us come back to this point now that we swept these lows. Because now that we swept, now that we swept these highs, that could be a sweep just to go back down lower. So I need to protect myself at that point, right? So moving my stop loss up is what I decide to do. And then once we do trade through this, once we trade, I should have put this here, into this midpoint here, I end up taking my profits at this point. So boom, we get in trade into the midpoint of this fair value gap, and I'm comfortable with exiting. I didn't know if the market was really going to hold any sort of direction today, because we're trading in between a daily BISI and a daily CIBI. So I was just looking to be in and out, and my stop loss was not emotional at all. It was strictly based on logic. I moved it based on what low I expected to hold and to hold as our last point of defense, right? So at no point was I just emotional in my stop loss and keeping it anywhere. There was a logic in every time I placed my stop loss somewhere. Even after we swept this low and spooled higher, now you could have moved your stop loss at a minimum here, right? Because now after this change in state, this low should now be protected. You could see this low from this change in state, this initial change in state, it never got triggered, right? This initial low from this change in state, it never got triggered, right? So that is why you have to be very strategic with your stop loss placement. Your stop loss should not just be a random place. It should be placed based off of either points of invalidation or different sorts of PD arrays on your charts. And that's why you need to know the different PD arrays, so you know what the market is doing at different points in time. So from this point, we do trade a little lower. There's a 1 minute BISI here that we trade into. We get some nice delivery out of it. And ultimately through this short-term high here, right? And this ends up spooling back into this daily SIBI. So could have got a little more juice out of this. We retest the midpoint perfectly, algorithmically, if I might add, of this 15-minute SIBI. We retest that perfectly and spool higher into this high, and ultimately we do retrace back down after that. So ultimately, I definitely should have caught probably 100 points on this trade, definitely at a minimum. But again, I didn't know what the market was going to do once we traded into that 15-minute SIBI, so I wasn't really looking to be a bag holder on this trade. So I know that was a little bit of a long-winded explanation, but I really wanted to explain the logic behind this trade and why it's so important to know where your stop loss should be placed and how to enter with the proper amount of size and risk. Anyways, that's pretty much all I got for y'all in this one. I don't really want this to go longer than this, so I will see y'all in the next one.